Hello everyone, welcome to today's webcast. As part of the Canon webcast series on optimizing your accounts payable processes, today's program will provide you with the insight on how to achieve accounts payable top performance, 6 areas of focus. We're excited to have you with us today, and we appreciate that you're able to put time aside to join us. I'm Cathy Bazar, Business Process Optimization Advisor at Canon Business Process Services. I'll be both your moderator and the panelist for today's program. Before we get started, I have a quick housekeeping note or two. We're recording today's session, and we'll have the webcast available on demand for those unable to join us live today. If you're interested in receiving today's PowerPoint, please send us your request in the chat box on the top right of your screen. To eliminate background noise, all participants have been muted. You will only be able to hear the presenters speak. If you'd like to ask a question, you can do so at any time by clicking the chat button in the WebEx dashboard on the right side of your screen. Type your question and click send, and we'll try to address your question before the end of the program. Because we have a limited amount of time, there is a chance we may not get to everyone's questions. So if we're unable to address a question during the live program, we'll be sure to follow up and address your question after. As part of our webcast series today, we'll be discussing achieving top accounts payable performance and the 6 key areas of focus. Some highlights of what we'll cover are the characteristics of top performing AP departments. Then we'll discuss the Hackett Group service delivery model, review best practices, and cover key capabilities. We'll move on with partnering with a service provider and review an implementation framework. And then we'll hopefully have some time for Q&A at the end of the session. For those of you who are not familiar with Canon Business Process Services, I want to take a moment to introduce us to you. We're a division of Canon USA focused on enabling clients to advance operational and business performance. We've been serving Fortune 1000 companies and law firms for over 30 years and offer a wide range of business process outsourcing solutions to help clients build stronger and more agile businesses. We focus on designing, managing, and continuously improving business process operations using the right combination of people, process, and technology. We offer customized solutions that can be delivered on-site, off-site, offshore, or a hybrid of these options. We go beyond cost reduction to enable businesses to run better and operate more efficiently. Over the past 11 years, Canon Business Process Services has been recognized as one of the top 100 global outsourcing providers by the International Association of Outsourcing Professionals. I'd like to tell you a little more about myself, given that I'm one of your panelists. As I mentioned earlier, my name is Cathy Bazar, and I'm the BPO advisor at Canon Business Process Services. I partner with Canon client service delivery, operations, and technology teams to create customized solutions combining people, process, and technology. These enable our customers to achieve their accounts payable vision. My 20-plus years of business and consulting experience includes operational accounting and finance, organizational change, and systems integration. Now I'd like to introduce you to my co-panelist for today, Amy Fong. Amy is an associate principal in the Hackett Group's Procurement Executive Advisory Program, as well as the program leader for the Purchase-to-Pay Advisory Program. Amy has 20 years of experience in both industry and consulting with a focus on procurement, supply chain, and organizational effectiveness. Amy, we're so glad to have you with us today, and we thank you for carving out this time to share your expertise and insights with us. So Amy, why don't you go ahead and get us started?
Thank you so much. I am excited to be here today, Cathy. Thanks for having me. And I'm looking forward today to talking about accounts payable top performance and go through what we think is a pretty solid checklist of the things that we see that the most effective top performing accounts payable organizations doing to be successful. So I want to talk just by I'm going to start by introducing the Hackett Group. For those of you who aren't familiar with us, at Hackett, we spend a lot of time looking at what makes organizations successful. We are a leader in benchmarking, transformational consulting, and advisory. I'm personally in our advisory practice. I lead our P2P advisory practice, and in that practice we work with a lot of member companies, and we also do a lot of primary research. So this value grid here on the right is kind of our philosophy that companies need to be both efficient and effective to be world-class. We look at world-class across all the G&A functions, finance, IT, HR, procurement, and within each of the processes, we also look at how you become a top performer. So a lot of interesting information that we find from our research, and I'm always happy to share it in a forum like this. So I want to start by talking about why this is important, right? So as we look at external change, we look at the current environment we are in. We all know, I think, that we live in a digital world. We live in a much faster changing world. When we think about what's happening in the world today, there's a combination of hyper competition, organizations that see their business model changed overnight, disruptive innovation, extreme volatility where, prices or consumer behaviors are changing very quickly, and this incredible outside rate of change that we all have to live with. And what we find companies need to do to be truly agile is to find ways to make the internal rate of change in their business match that outside rate of change. So that involves, digital, it involves operationally being customer-centric, and it involves analytically having information-driven proactive decision-making. There are some very common traits that we see in enterprises that we view as truly agile. They start with customer centricity. That guides their processes, the way they plan, the way they make their decisions. Operationally, they're responsive. They can make changes to their operations very quickly as the supply chain changes, as the customer preferences changes, as their competitors changes, et cetera. And they're information-driven in their decision-making. There's a huge amount of data out there right now, including in the source-to-pay process, and they are able to digitalize that information so that they can make quick decisions that are well-educated with very little time investment. And industry leadership really is digitizing their value chain right now. So we just had our conference where we talked about digital acceleration and really how companies are digitally transforming to lead in the enterprise world. I believe personally that this all filters down to every one of us in every organization, including in the AP process, where it's no longer good enough to just process invoices and pay suppliers. That's not enough. We need to enable the business in a more effective way. And so I want to start out by asking this question that looks at what the priorities are in your accounts payable organization. And I see the poll has come up, so you can go ahead and respond on the right side panel, but I'll just read through the responses. The options are, what are your priorities? Is your top priority increase internal stakeholder satisfaction? Is it to obtain more value from the P2P process? Is it supporting sourcing savings? Is it to improve P2P business agility, reducing maverick spend, reducing your P2P operating costs? Is it all of the above, or is it none of the above? And I think you can only pick one on here, but use that all or none if you feel that multiple things apply here. So we're looking for really your top choice on what's driving your P2P or your accounts payable objectives right now.
Thank you. So if everyone just takes a moment, record your answer. I see we have people recording it already. And we'll give you a few seconds just to tally up those responses. We have a large group today and a good level of participation. So thank you in advance for your responses. And in a few seconds, I'll let you know what the group has to say today.
All right, so it looks like, go ahead.
Oh, go ahead, Amy. I'll be interested to hear what your impression is.
Yeah, I can't see the results, so I think that they have to be shared before I can see them. Or if you could read off the poll results, that'd be great.
Absolutely. So 9% of you are going with option A, increase stakeholder satisfaction. 9% obtain more value from the P2P process. 18% reduce P2P operating expenses and costs. and 64% all of the above.
All right, so it sounds like there's a bit of a mix, but a good number of people who are in the all of the above. 60%, I think, sounds like most common was all of the above. So that is pretty, I wouldn't say surprising, but pretty consistent what we've seen in the past. And I'm going to flip to the next slide here, which is the results that we saw when we asked P2P leaders this same question or similar question. In this case, they were able to select multiple, and they said, critical, major, high, medium, low. So there were multiple, responses here. It's a little bit easier when you're doing a big study versus a poll on a webcast. But I think the results still point to the same direction. We asked this both in our P2P key issue study and then again in a room of about 45 P2P process leaders. And so we were able to get a little bit more detail in the conversation with them in terms of why they were saying this. And what we found was that stakeholder satisfaction has become increasingly important, as has this idea that the P2P process needs to be bring more value to the organization. It needs to be effective, not just efficient. Reducing P2P operating costs, although it's a noble goal, and we all want to take out, any excess process costs where we can, and we certainly should be, it just can't be the primary goal anymore. We need to look at how we support agility of the business, how we capture savings by reducing average spend, how we drive more, an easier process for our internal users. So I think that's really important, and I'd say an easier process for our suppliers as well, because I believe that's equally important. So with that in mind, I want to just move on to how we define top performer. When we look at top performers in the P2P process, we are looking at those that are in the top quartile on a mix of both effectiveness and efficiency drivers. And there's obviously a series of different metrics that we look at for both efficiency and effectiveness. There's about 20 metrics altogether. We look at those in the top quartile on that combination. And we call those top performers. They have better output. They drive more performance than the others. So we're able to look at the behaviors that are different between those two groups. And I think it gives us a really interesting, empirically based background for looking at best practices. I'm going to be talking today around this wheel that we call the service delivery model, and this is a pretty important framework for Hackett. There's 6 different main aspects here. You'll notice this is our digital service delivery model, just updated this year, where the customer is in the center. And this is, focused on how enterprises can be more digital, agile, data-driven, with a combination of both proven best practices, which is a lot of what I'm going to talk about today, as well as emerging practices, the newest things that we see, emerging in the industry. And I want to talk through each of these because I think it's really important when we talk about improving an organization to not just focus on one area like technology or, outsourcing, service partnering, or talent. It's really all of these things. And so as we go through, we'll be talking about more detail on the practices in each of these areas. But just a level set, when we talk about technology, we're talking about, having the enabling technology that supports the business, right? Having a agile decision-making framework, integrated architecture, and tools and processes that are highly automated. Service design is really about how we look end-to-end at the processes, how we have a flexible catalog, agile best practice deployment. Analytics and information is about digital transformation. It's about the information that flows through our technology. So how do we keep our data clean? How do we manage it most effectively? How do we make it easy to access? Organizational design and governance is more about how we set up roles and responsibilities. Service partnering is about outsourcing choices and service placement choices. Where do we partner to deliver a service versus where do we do it internally, and where within the organization it goes. And then human capital is about our talent strategy, right? What kind of people do we need? How do we train them? What are the skill sets that we need? So let's talk about each of these from the perspective of accounts payable and what we believe are, the best practices. I think of this whole webcast really as a checklist of practices to implement. So first of all, organization and governance. When we see accounts payable organizations with an effective governance model, they typically have standardized their policies as much as possible, and we say standardized globally with local exceptions only where needed by local legal requirements. They have RACI models that support the process across different activity levels, different roles, and clear accountability on who's doing what are our responsibilities, who needs to be involved. They've streamlined their DOA policy, their purchasing policy, their approvals policy. We see a lot of companies right now going out and streamlining policies, especially as they implement technology. They're revisiting something that's really a pretty old topic, but looking at it in a new way that's more customer-centric. We see a high level of collaboration between purchasing operations and accounts payable. This is one I talk about a lot because I think it's really fundamental to a lot of the other things that we're going to touch on today. And they have KPIs, they have a strategy across the process. So they have ways of measuring themselves that are collaborative, and they're reaching for the same goals. When we talk about, again, that alignment of purchase to pay, we are looking at either one single owner who's responsible for the whole P2P process. They may have people report to them, they may not. It's not necessarily an organizational reporting responsibility, but it's a planning and a goal process and a process development responsibility. Or we may have separate purchasing and accounts payable process owners, but they collaborate very closely together. And by high level, what I want to see there is that they are talking on a regular basis. They have a good working relationship. They have common joint KPIs. They have common process improvement projects, meaning they take, for instance, the treasurer's goals around working capital, and they build a plan on how they're going to implement that from both a supplier and a payment perspective, as well as a purchasing and a sourcing perspective. That's just one example, but the ability to have this kind of end-to-end collaboration really drives those types of projects. Service design refers to looking at, where you're going to put processes and streamlining processes. So high level of automation, highly standardized, common global processes, coordination and standardization of payment policies. So for instance, having, aligned on which kind of payment tools you might be using, whether you're using early payment discounting, early payment discounts, dynamic discounting, or P cards, or other tools, supply chain financing, other things in your supplier payment strategy. Invoice approval requirements go back all the way back to determine how you're going to let people buy, so essentially a channel strategy. And they've fully integrated tools like P cards and two-way match and other tools to streamline the process where possible. So streamlining policy, streamlining processes in P2P, a couple other things that we see. One that's key is consolidating and centralized invoice receipt processes. So we're not having invoices go out all over the place. Optimizing invoice automation strategy, implementing workflow. So there's an automated workflow to track and approve invoices. Considering often there's a payment clock shift, so making decisions around check run frequency and how we count on-time payments and how we communicating those to their suppliers as well. There's also measuring and providing budget visibility to stakeholders. So being very clear on what your objectives are with your stakeholders and your joint projects. Analytics and information management. So when we're talking about data in the P2P process or the AP process, there's a lot of different types of information. There's obviously supplier information. There's also item master information on the direct side. There's usually catalogs that have, indirect purchasing capabilities. There's contract data, and I often see contracts mainly focused on by the sourcing team, maybe not as much access from the AP team, when really there's terms and conditions that have been agreed to in those contracts that should flow all the way through the process. So, and as well as, outside information that may be relevant around supplier risk profiles or needs for supply chain financing or other kind of information around the supply base, as well as internally forecasting and visibility into supplier relationships and volumes that may affect the AP organization. So there's quite a bit of information, and we're seeing source-to-pay organizations use big data in more innovative ways. There's a lot of really interesting things happening there. But fundamentally, when we look at those that are great at analytics and information management, they're doing things like they have standard master data standards in place. They're consistently using them. They're consistently cleansing and refreshing their supplier master data. In many cases, they're putting in more sophisticated tools like supplier information management or lifecycle management tools that help to gather that data in a more virtual way, self-service tools for the suppliers. They have onboarding processes that balance that use technology to balance the data that we need for risk mitigation with efficiency. So, the virtual supplier master kind of scenario where suppliers are providing the data to multiple entities at a time rather than a really slow process to onboard a supplier where we have to all check everything manually. They have global supplier payment terms, including discounts. So they've combined their terms and their data globally wherever possible. And the policies and procedures are clear and they're well communicated. Compliance with policy is high because people own the policy, they understand it, they know it's enforced, it's monitored electronically, and it's not necessarily a penalizing type environment, but when you see something like, say, after the fact POs that are placed after your invoice, that data is mined, and then they go back with an educational approach to their users to help them prevent that in the future. So one capability we see in supply data management, for instance, is the process of approving supplier additions. And I would say the most common mode we see is that top performers are more likely to have procurement approve all of their supplier setups, but then they have AP actually enter the data, or they may have a third-party data management team. Reducing the proliferation of suppliers is really important, and that's typically where procurement gets involved. But leading organizations are doing things to streamline this setup. I mentioned a couple technology options. They also may have a separate data team that handles all master data across different towers, customer data, product data, supplier data, and those people are trained to, they're data people, right? They're trained to enter it quickly and to validate it and to keep it refreshed on a regular basis. It comes out of the more assembly line nature of approving invoices. 28% of the companies that we've worked with have set up some kind of separate data team that's responsible for that. They also take, some shortcuts for process streamlining, like using a one-time supplier setup functionality in the ERP. So vendors that are limited use one time can be set up in a quicker way, and then if they are used later, they're activated fully. Dynamic scorecards are another trait under information management, and top performers really capture information to measure noncompliance. So I mentioned that after the fact PO type of example, and I think that's one where you can improve things by monitoring and measuring data and then working with stakeholders. Another one is adherence to negotiated pricing. So 67% of the top performers we work with are collaborating with sourcing and procurement to measure adherence to negotiated contract pricing, meaning they're looking back and looking at invoices and validating whether somebody bought from the right supplier through the right process at the right price. And if they didn't, they have an opportunity to go and correct that in the future. We see about 10% of savings that are negotiated lost to maverick spend. So that's a really important one. This is probably one of the most significant value drivers when we talked about upfront those opportunities to drive more value from the P2P process. This is certainly one of them, reducing maverick spend and increasing internal compliance. And having, the metrics and KPIs that help assess and then improve on these kind of issues is really important. Technology is the next area I want to talk about. Enabling technology is really about creating technology platforms to support service delivery. We see, several different types of technology. I'll talk through some of the benefits of technology in a second, but invoice receipt being automated is probably the first step. So that, you're using a combination of electronic format and to receive invoices. Where not possible, then data capture is used. Workflow for invoice routing and approvals is automated. So those electronic invoices are moving through an electronic routing so people can approve them, in some cases even mobile from their phone, and that's an important process change. Supplier and internal stakeholders having access to a secure online portal, meaning that a supplier or someone inside the organization can see the status of their invoice. They can review whether it's been paid. If it's on hold for some reason, they can address that. There are some systems where they can even just reply by email and make notes on the invoice for themselves to be able to resolve the issue. And more we see single online portal for employees to perform all of their purchasing and their AP activities. So when we look at the AP process, and these are the 7 steps that we break the AP process into when we study it, we see a variety of ways that automation really helps. And I've said for a long time, I think that technology is probably the driving force, the primary thing to invest in to streamline the AP process. I think it's very hard to be a top performer if you're in a manual invoice processing system or process environment. So with pre-processing, automatically receiving and sorting paper documents, no longer the need for batching of invoices. In the old days, you had to batch an invoice and put a cover sheet on it and then scan it. That's no longer required with most systems these days. Automatic approval steps and accounting code verification, processing, auto matching of PO-based invoices and touchless processing of non-PO invoices, meaning that if you receive an invoice electronically and it matches the PO and the receipt, that's it, it's matched. The system sees that and it goes on to be released to payment. There's really no reason to manually be spending time on that. With non-PO invoices, there are touchless ways to route that through and get the approver to approve them. Discrepancy resolution, so increasing first pass match rates, of course, but also reducing the need for discrepancy resolution by validating invoices against the PO and against the MDM system. And a lot of these systems, they will highlight when there's a conflict with master data management, and then you can go right into that system and resolve the conflict, resolve the discrepancy. And passing this around electronically as well certainly streamlines that process. From a payment perspective, we have greater visibility into status of invoices. And some of the best systems allow you to prioritize your payments and prioritize your approvals based on the ability to capitalize on early payment discounts or to prioritize suppliers that may have a higher priority for various reasons that may or may not be related to discount and supply chain financing. File store retrieve, so we've reduced the physical shipping and storage costs with digital invoicing. Certainly not having, anybody who remembers the rooms of file cabinets to hold all of this information for years and years and years and moving it in and out of offsite storage. In my old days, that was the way, and I'm probably dating myself. I'm sure there's millennials on the phone that don't remember rooms and rooms of file cabinets, but certainly freeing that up frees up not just space and money, but a lot of activity. God, the time to file everything was amazing. So, and then finally, customer inquiry and response. So self-service, where suppliers, we know that a significant number of calls are, where's my invoice? Has it been approved? Where's my check? And the ability to see that online is really, becoming a standard. I think all of us know that if we need to see the status on our paycheck or on a check, a deposit at the bank, most of us probably go online. We don't walk into the bank physically if we're under the age of, 60. We don't. they walk into the bank and ask to see the status of a payment. No, we probably look at our phone, or at worst, we look at our desktop for the website. So I want to talk a little bit about the different ways of invoice automation, because this is probably the area that people, have the most questions and want to understand what we really mean by automation and electronic invoicing. So there's kind of three different really columns here, I would say, when I talk about them. There's actually four if I look at it here, but let's start right to left and talk about invoice elimination. So we can reduce the number of invoices we have coming in overall by using tools like ERS, evaluated receipt settlement, or P-cards, where we don't actually get an invoice from the supplier at all. And obviously that's going to streamline processes in several ways. When we look at the left, then we have advanced invoice processing. So for the invoices that we do receive, which realistically is going to be a significant portion of our spend, there's really two different approaches. And the most advanced would be electronic invoicing. Ideally, we want to receive all of those invoices in a format that's machine readable, that doesn't require any processing. So they're submitted either through a supplier portal, through a third-party network, through EDI with VAN, through a value-added network. There's some kind of file upload or self-entry, or in some cases we use PO Flip, where the supplier can take the PO and turn it right into an invoice directly. There's also capture, so where we can't get to 100% of those invoices coming in electronically for various reasons, we have other tools that will allow you to scan, to electronically capture the data through a fax or through an email, and then that non-electronic format is put into the system. There may be a little bit of manual checking to validate that it's correct, but it's not the same level as data entry from a paper invoice. So ultimately, we're trying to get as far to the left on this tree as possible. I think it's important to note that we really don't see as much EDI in the industry anymore. Those that have EDI still use it, often with their largest direct suppliers, but there are a lot of new XML-based, direct connect-based solutions to upload data to transact data that we see more and more. So ultimately, we see 52% of top performers using some kind of advanced connectivity solutions, direct connect, value-added EDI, or a third-party network. And I would say trend-wise, this is the area that people are really focusing on, but still has, from our last data at least, has a lot of opportunity. So when we look at the percentage of electronic or invoiceless transactions, we see top performers with 70% of their invoices coming in electronically. And I do work with companies that are much higher, that are in the 80–90% range. There are certainly a lot of companies out there. But when we look at the peers and those that are less mature, their percent of invoices received electronically is still quite low. The median in 2015 was 19%. And that's fairly low. I mean, 25%, we'll hope that this increases when we do our 2017 data to a little bit higher, but it's really been a struggle. A lot of people have put in systems, but they haven't gotten their suppliers on board, they haven't fully utilized them, and there's still a lot of opportunity there, a lot of money left on the table, in my opinion. When we look at the results of this kind of efficiency gains, if you look at the bottom, the invoices per AP FTE, that means the number of invoices per account, staff that you have, and the cost per invoice, we see that those using invoicing have a very strong advantage, even over those that are using invoice capture and workflow, certainly above paper. So I typically say, if you're on paper, you need to move to electronic. If you are, some people ask, can I take this intermediate step of using capture? It's certainly an improvement, but it's not all the way there. There's still a lot of benefits to moving to fully electronic process. Another piece of technology I want to make sure we mention is self-service solutions. So we talked about the ability to view inquiries online, or to handle your inquiries online through self-service. And there's two ways really to have self-service. One is voice response, which is kind of an older way to do it, and portals on the internet where a supplier or an internal person can log in and see their status. uptake rates for those have in the past been fairly low, but when we look at those who are actually using these technologies, we see a pretty significant, we see among the top performers, 56% of their inquiries are being resolved by self-service, meaning that, more than half of the questions they used to get are now being resolved without somebody having to spend time answering an email or on the phone, and that's a significant savings. This inquiry response part of the process is actually the second most time-intensive, resource-intensive step in AP. So, it kind of goes from the invoice processing to inquiry response to discrepancy resolution. Now, there are high-value activities in discrepancy resolution and inquiry response. You're talking to your stakeholders, you're supporting their problems, but answering a question, is the check in the mail, is not necessarily high value. So if we can move people away from the low-value questions and into the high-value questions, we do two things. One, we spend more of our resources time on high-value, customer-satisfying activities, but we also improve the online experience of all of our stakeholders. And I view suppliers as stakeholders as well, by the way. So this is just a little bit of an example of self-service portals and where we see them being most useful. Some of the key features in terms of usability are being able to maintain master data, being able to submit invoices, so taking a PO and flipping it into an invoice, or allowing a supplier to upload an invoice where they want to. Using it to research discrepancies. I mentioned kind of the ability to send the discrepancy electronically to a customer or to a supplier with the PO and invoice link to resolve a discrepancy, and the ability to view status on an ongoing basis. So most AP online portals do more than just show the status of an invoice. That's kind of the beginning step. Most of them also have more advanced functionality that really streamlines the process and makes things more enjoyable for all of us. And the point there, the number I mentioned was 13% in terms of the overall AP costs that are going towards inquiry response. So top performers are also a lot more likely to be tracking their inquiry response times, and they're quicker to responding to inquiries. So we saw that 40% of the peer group did not have any kind of case management system in place. In other words, people asked questions, but they never really tracked where the questions were coming from, what they were on, how long does it take to resolve them, and that kind of thing. But tracking questions from your stakeholders is really, an important factor to driving a strong stakeholder focus. So let's go on to human capital, the training, the talent, the skills development that we need, as well as recruiting and retention. And what we find world-class or top-performing AP organizations do here is they train on a formal basis. They have an emphasis on improving day-to-day tasks, but they also focus on expanding the role of resources to support higher value activity. I can tell when people have a broader view than just within their own job in AP. I can tell when people have, only done their very, very specific task versus they understand the goals of the purchasing group. They've worked with the buyers. They know the category managers. They're looking at the business from an end-to-end process, and they're looking at how to do it better. Skill level among the staff is consistently high. They support delivery on tactical, but they also have, higher value activities, process activities that they're focused on. So they're thinking outside of just their task. And in most organizations, we see automation and outsourcing replacing the routine roles. And we see that, the process of, I'll go back to the filing cabinet, right? Receiving all this paper and filing it might be gone, or receiving the paper and typing it in is gone. But we see those people, the same people, not necessarily going away, but focusing on higher value activities like analysis and customer-facing activities, discrepancy resolution, inquiry response. These are all things that for most people are more rewarding. They're able to spend their time really, in a more problem-solving type environment versus the tasks that were a bit more frustrating or manual in the past. So when we look at top performers versus peers, they need fewer FTEs. They need fewer people. They use closer to about 5 FTEs. This is per billion of spend versus 18, almost 19 people for a manual process or for a peer, a non-top performing process. There are a lot of differences here if you look into the individual processes, but I would say that the automation is probably the biggest driver of that difference. And then finally, service partnering. So with service partnering, we're really looking at what do we do in-house versus what do we offshore or what do we outsource? Where's the best place for an activity to be? And what we see top performing organizations doing is that they've evaluated this. It's not that outsourcing is always the best answer. It's that they've gone and looked at which activities should we keep in-house, where does it make sense to have somebody else do them because they have a better capability at this and it's not our core competency. They've automated their supplier onboarding process. They may manage the process internally, but they may or may not, have it localized or globalized to the point that it's standardized and streamlined. Other data management beyond the core process management is often outsourced as well to a third party. And they've made the decision around, what things need to be locally, what needs to be done onshore versus offshore, in-house versus outsourced. So it's really a decision around the right place for the right activities. What we see, I mentioned invoice receipt before, we see primarily best practice being to have invoices sent to a single global processing center or to a regional center, several regional centers. Definitely not best practice to have invoices go decentralized all over the place to different facilities. There's a lot of reasons that doesn't work out well. But centralizing the invoice processing activity is a pretty strong leverage point in terms of process efficiency and also being able to adopt best practices. So with top performers, about 90% of their invoices are sent centrally. And when we look at the different placement models of AP, we see most commonly AP is centralized. We see certain activities are outsourced. So for instance, pre-processing and verification of invoices are often decentralized. Paper invoice processing is often outsourced. The matching process and sometimes inquiry response is outsourced. So there's kind of a mix here, but often what we see is a centralizing of AP and then using a third party for certain aspects. So for those, for instance, paying paper checks, sometimes they'll have all paper checks go to a third party to pay those rather than doing check runs internally anymore. In terms of the efficiency advantages, so I've gone through kind of the service delivery model, and I just want to go back. We talked about looking at both efficiency as well as effectiveness in the AP process. And I think it's important to look at when we talk about those top performers, they are more efficient. Their cost per invoice is about $3 versus about $6 for the peer group. And their cycle time for an invoice to approve an invoice is about 5 days versus 7 days for a peer group. Now, that doesn't mean they're paying it right away, but it's approved and they can decide when to release the payment based on payment terms. 2 days may not sound like a lot, but when you think about all of your payables and 2 days of processing time for that whole team, plus 2 days earlier to make a discounting decision or a supply chain financing decision for your suppliers to offer them a financing option, there's actually quite a bit of capital behind that. So it is really a significant efficiency advantage. They also benefit, though, from a higher match rate. They're more likely to pay their suppliers on time. So their match rate is about 90%, meaning that the invoice is matched successfully on the first attempt 90% of the time versus about 73% of the time for peers. So that's a lot less rework. It's a lot less discrepancy resolution. Their on-time payment rates are 90% based on their policy as well. And that's a big focus when you're trying to build credibility with suppliers, when you're trying to be a customer of choice and a leading company in your industry, you need to have suppliers that will have a good relationship with you, that can rely on payments, and that will give you their best staff and bring their best idea to you. When we're talking about agility at the enterprise level, good supplier relationships are incredibly important. If you're the type of company that's, holding payments at the end of the month without telling suppliers why, that over time will erode your credibility with those suppliers. So I think it's important to think about that. So with that, that's kind of my wrap up in terms of the effectiveness and the efficiency of top performers. And I want to turn it back over to building the business case and the framework. And then we'll wrap up in a minute with just a final checklist.
Thank you, Amy. So Amy shared a lot of great information with us, and what I want to talk to you about is about how we take that information and we can build a framework around it to implement those changes and transform, as well as the business case for change. So the first that I want to talk about is a little bit about the case for accounts payable transformation. So Amy talked a lot on one of her slides around the enterprise agility and the external change acceleration for keys to success. And that really ties into, can you advance the slide, Amy?
Sorry, I turned the ball over. Do you want me to keep advancing?
Yeah, if you could try to advance, it's not, I don't believe it's advancing.
Anne-Marie, are you on? You have the ball now. I can't take it back. So
in the meantime, while we work out the slide moving forward, I'm just going to talk a little bit about that transformation. So one of the quotes that I like to share is from Jack Welch, which many of you know from GE days. And one of his quotes is, "Change before you have to." And I think this is really relevant, and based on some of the information shared by Amy and the Hackett Group, we're in a time where we're talking about the rate of change being so fast and so accelerated. Being agile finance organizations, having the ability to be fast and flexible, and that really helps us to build that case for accounts payable transformation. So we want to do things like optimize our financial processes like accounts payable, as well as those processes that they integrate with, such as procurement, supply chain, finance, treasury, meeting both internal and external customer needs, enabling employee development and motivation, contributing to achieve the enterprise growth and vision, and of course getting those financial insights and cost management. All of those things are really important as we build the case for change. With that, okay, it looks like we have a question coming in from folks out there. The question on the write-in is, how do I get my decision maker to say yes to a project for accounts payable transformation? Well, that's a great question. And my expectation is that we have both folks trying to drive change from their AP organizations as well as some of those decision makers on the line. I think that what we're going to talk about in the next few slides is really going to help that. But in just kind of a quick summary, I'm going to suggest that the best thing to do is have your facts in front of you. Think about the metrics and baselines that Amy talked about a little bit earlier. Get that snapshot and that baseline for your organization, and then talk about where you're going to drive the value. Again, thinking about some of those earlier slides. What are the most important pieces of information that are driving your organization? Is it cost savings? Is it efficiency? Is it customer satisfaction, et cetera? Amy, do you have anything to add to that?
Yeah, I think that's a great point in terms of, understanding. I think you need to start with what are the objectives of your business? What are your stakeholders' needs? And by stakeholders, I mean everybody internally. So if you're, trying to convince others to invest, in this kind of technology, you know, what is it, what's in it for them, right? What are the benefits to the business? And typically you can find quite a few benefits to the business in having a more streamlined, user-friendly process. So I always start with the needs of the stakeholder and then build the story around that.
Perfect, thanks. I think these next slides are also going to help drive some of that home. When you talk about accounts payable transformation, I always think about it in terms of creating value beyond cost savings. There was a time within the past few years that really cost savings was driving transformation, and we're seeing more and more that that is evolving into other areas of importance within organizations and enterprises. If you think back to one of the prior slides, again, that Amy was so kind to share regarding the shift in focus toward effectiveness goals, I think it was in the earlier portion of the presentation, and looking at that slide, it's actually reducing P2P operating costs is actually 5th on that list, with stakeholder satisfaction, value, and support source savings, and improving P2P business agility, as well as compliance also being ahead of it. So you can see just from the statistics that Amy shared that it really reinforces that fact that when we look at transformation, we want to think about efficiency as well as the extended outcome, which might be cost savings, but it's not the primary focus. And what does that transformation really look like? When you think about the human capital portion of the Hackett model, the service delivery model, it really aligns with this. So we're talking about transforming an accounts payable organization from being administrative, which many who are in more of a manual state of being are. You have manual data entry. It's very tactical. It's repetitive. There's not a lot of employee morale in positions like that. And in this day of technology and mobile technology included, it seems to be a little bit inefficient and very archaic. What we want to do with building a framework and a model and building that business case ties into what do our stakeholders want to have, as Amy mentioned. So most companies want to move to become more collaborative. So with that, you want to transform your accounts payable organization to move into that space as well. Become a collaborative organization, have more automation, increase visibility to all of your stakeholders, whether they be in accounts payable, or they be in your supply chain, your P2P organization, your treasury department, your CFOs and other financial leadership. So be supporting versus just someone who keys in data. You're really going to support those organizations from a decision-making perspective and share knowledge. Have data available, so more fact-based decision-making and add efficiency. And something that's really important is shifting that role within the organization from clerical for your staff to becoming more analytical, doing more issues resolution and being more proactive versus being reactive and just doing some data entry. Finally, you want to transform and become strategic. This is where some intelligence and analytics really comes into play. This is where you can help your organization be performance-driven, help the procure-to-pay team and help them understand what their spend analytics are, provide information for working capital optimization, provide information to Treasury when it comes to cash management, and of course insights into procurement. It's in this that you really recognize that accounts payable is no longer a standalone back office function. It's a critical part of your organization as it integrates with these other areas in terms of finance, procure-to-pay, and supply chain. So again, going back to that framework and assessing how to build your business case, going back to that question we had, I think this is a great tool to use to help build that business case and share with your decision makers what that case for change might look like. So this is an accounts payable maturity model, and there's 5 stages. So there are organizations that you can kind of self-assess yourself, right? Take that benchmark, look at yourself and say, where do I fall in these? So if everyone just wants to take a look at the individual areas and some of the key points within them, I'll highlight a few. Paper-based is clearly the most manual of all of these. There's really limited visibility. a lot of manual data entry, primarily 100% paper invoices, generating the accounts payable process. Image-enabled will also have a large volume, 100% of paper invoices. Front and back-end imaging might take place, but for storage purposes only. That does not constitute electronic invoicing. That's just imaging. Again, manual data entry. Approval and exception routing could be via email, or it might actually be hand-delivered. Again, you have very limited visibility into reporting or the life cycle of your invoice. The next is technology-driven, where you have centralized invoice receipt. You start engaging in some of the EDI technology that Amy mentioned earlier. Auto-indexing, you start extracting data and be able to take that data and use an automated workflow tool to be able to move that through the system and facilitate exception resolution as well as matching. Now you start picking up on your enhanced visibility and reporting. Efficient organizations will drive more in terms of electronic invoicing, intelligent data capture, and have high-end end-to-end visibility, and have the ability to produce reporting and dashboards. Finally, you want to look at some organizations who might fall into the maturity model and being optimized, where they're essentially touch-free. This gets more into the use of supplier portals and things of that sort. So those are the key areas of the maturity model. So what we'd like to do is ask each of you, now that we've walked through that model, is to take a look at your own organization and just give us an idea of where you think you fall in the maturity model. This would be your baseline in building a case for change. The options are paper-based, image-enabled, technology-driven, efficient, optimized, and some of you may not be real sure where you fall. So we have a lot of responses coming in. I'm going to just start reading those off. It looks like we don't have anyone who's paper-based, so it sounds like folks are starting to engage in technology. 20% are image-enabled, 40% technology-driven, and 30% are efficient. And we don't have anyone who really seems to be in that optimized area. So those results don't really surprise me too much. I believe that over the past couple of years, there's been more of an effort for companies to be able to move forward and drive technology and automation and efficiency throughout their businesses. With that, I want to just quickly review kind of the framework and steps to optimization that we at Canon can help with, and that is the framework that we like to offer in terms of how to drive to become a top performer, how to optimize accounts payable organizations, what the results are. So making that shift from being manual or image-enabled, going into being centralized and digitized. And you can see the transition going from manual processing to introducing centralization and digitization to going with automation of workflow with some labor optimization, as well as continuous improvement as being the stages. I just want to highlight a few key changes on this slide. So first is the dramatic increase in optimization from 0 to 50% just by centralizing and digitizing, so taking the paper out of the process. That also cuts your cycle time down significantly and improves your invoices per FTE dramatically. As you continue to introduce both process change, optimization of labor, and technology, you can see those numbers continue to improve. So I just want to talk a little bit about the Canon model and how that ties together with becoming a top performer. So with the Canon solution for accounts payable, it's really a managed service that is provided with the centralization of invoices, if they're hard copy or email, coming to a centralized location. Also introducing and driving electronic invoicing through the use of a supplier portal. The conversion of any data that's coming in a non-electronic format to become data that can be used for extraction to lead into the pre-approval validation and the PO matching and workflow opportunities. In pre-approval and validation, you have folks who are continuing, and the system is continuing to evaluate the invoices, ensure that data is correct, ensure that we don't have duplicates, validating master data for the vendor, purchase orders, et cetera. If you go into approval and exception routing, we can support two-way match, three-way match, line item matching, and then facilitate exception handling with buyers, receivers for those exceptions to the matching process, as well as workflow for approval routing based on delegation of authority rules. Finally, providing electronic files to be used for payment processes, whether they be ACH, posting to the GL included in that file, as well as ACH and any check runs that you have to do. As you look at the bottom, you can see where Canon exercises those responsibilities versus that which is the client's responsibility. Many of our clients feel that the payment process is really something that they want to have control of, which is why you'll see the heaviest involvement with Canon takes you from ingestion through to ready to pay. Along with the automation, it's very important to recognize the talented labor, the labor optimization, the fact that there's continuous process improvement. A model like this doesn't facilitate just implementing technology. It really needs to be that continuous process improvement where you're reviewing the dashboards, you're reviewing the exceptions, driving to find out what the root causes are to those exceptions, and continuing to drive that optimization to become that top performer that you're striving for. Along with that comes the organizational change management. So depending on the amount of technology, depending on the amount of process change, and depending upon the culture of each organization, we like to ensure that we're customizing the solution and the implementation of that solution to align with each customer's unique mission as well as their culture. So I'll let all of you, when you get to the deck yourself, to just take a look at an example of a commercial bank that we have worked with, what their challenge was, providing that solution, and how results were being able to be driven through the implementation of people, process, and technology. Amy, I know you wanted to talk a little bit about the checklist, and I'd like to turn to walk through that checklist.
Yeah, thank you. Just wanted to leave this as a takeaway. As we talked through, the slides above that I presented, as well as the last few examples and stories, I think there's a lot of points in there and a lot of best practices. We have this checklist, and there's also a paper that Canon is distributing that covers a lot of the content in this webcast with maybe additional color and context. But I like this as just a quick checklist. So if you said, you're somewhere in the process here, to me, these are the fundamental 10, 15, I haven't counted today, but 10 or 15 practices that need to be implemented to really move yourself towards top performance. So I view this as kind of a starting point. If you can review this and you have some big gaps here, that's probably where you can start focusing. Of course, this is, somewhat 101 and 201. There's certainly more advanced things, 301, 401 levels of AP digitalization and transformation. We certainly want to leave this as the takeaway to help you through starting off your transformation.
Thank you. So that concludes today's program, and we want to thank you for joining us. We hope you found that today provided some helpful insights to you. A high-performing accounts payable department is achievable when you focus on what's important and get started with the practical steps that we outlined. If you have any additional questions about the material presented today, you can take a look at our contact information here on the screen, and we'll be happy to follow up with you to discuss how we can help. Also, we ask that you please see the exit questions that you leave us today, and we very much appreciate your feedback about today's program. Thank you and have a wonderful afternoon.
Great. Thanks a lot, everyone.